Today, I want to talk about how a big CEO has said that 500 or more banks will soon fail. I also want to talk about the imminent collapse of NYCB, New York Community Bancorp. So stay tuned and let's make some money. Later on in the video, I also want to talk about how we went 4 for 4 on incredible trades in the Millionaire Mindset Trading Group, like 177% on APM. But let's dive straight in with the key information. So, a top real estate CEO warns that 500 or more banks will either fail or be consolidated over the next 2 years. So he says ever since 4 regional banks holding a combined $532 billion in assets, headlined by Silicon Valley Bank, failed in March 2023, regional banks have been under scrutiny from regulators. Remember, we had Signature Bank, Silicon Valley Bank, Silvergate Bank, and FRC First Republic that all failed last year. And also today we've just had the announcement of the imminent collapse of NYCB, New York Community Bancorp. But obviously I'll touch on that in a little while. It says the RXR CEO, Scott Relcher, described how regional banks will face a slow-moving train wreck as waves of commercial real estate loans mature over the next 5 years. Relcher has faith that many commercial real estate owners, operators and lenders will figure out a way to overcome the challenges, but he's more skeptical about those dodgy regional banks. He said, I think there's going to be 500 or more less banks in the US over the next 2 years. He said, I'm not saying they're all going to fail, but they're going to be forced into consolidation if they don't fail. aka 500 banks are either going to fail or be bought by JP Morgan Chase, most likely, saying they don't have a business model that's going to enable them to stand alone and be competitive and retain deposits and service customers the way that they have. And he said regional banks and the commercial real estate exposure could even end up being a systemic issue. Now, a systemic issue, for those that don't know, is an issue that could potentially collapse the entire financial system. Therefore, system issue or systemic issue. He spoke about the doom loop of banks taking losses in commercial real estate, announcing those losses, and then having customers pull their deposits, which effectively leads to more loan defaults and even more losses. That big loop or big circle where losses turn into withdrawals, turning into more losses, into more withdrawals. Now, what I think is brilliant and what makes me so chuffed is I see so many FUD shills in the comments telling me how banks will never collapse, how the squeeze will never happen, and how the stock market will never crash. They continually try and tell me that I'm wrong, and obviously that everyone should sell AMC shares. But today, we prove them all wrong, as NYCB or New York Community Bancorp has just announced effectively their imminent collapse. And you may have seen this morning, New York Community Bancorp shares fell by another 23% this morning after a report of calls to raise desperate cash. So this morning, New York Community Bancorp basically announced they needed to sell more shares. They needed to raise cash, but obviously they can't take on loans for 2 reasons. A, no one's going to lend to a failing bank, and B, NYCB can't afford the interest repayments anyway. They need investors to buy shares or to invest in them or give them money where they don't have to pay it back for a desperate chance to survive. That news caused an immediate 23% drop, and that drop exacerbated as the day went by, dropping 40% and I believe even 60% at one point in one singular day. So guys, this morning I said in the pre-market I was watching 4 separate stocks: PHGE, AISP, MEDS and APM. I also gave the prices I was watching and the breakout levels, and Tony managed to lock in 2 separate trades of 23% and 48% on APM. CSAM's also locked in $982 on APM as well. We can see during the market, APM finally got that $6.28 breakout and ran all the way to $17 per share for 177% total gains. Joe also locked in 48% gains on MEDS on the run up to $21 per share. And you can also see on that screenshot, he also took a second trade on VINC, also locking in 42% gains in the same day. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below. Now, what's interesting is that NYCB announced just 5 days ago that the company had strong liquidity and a strong deposit base. But now, all of a sudden, just 5 days later, they're looking to desperately raise capital to restore confidence, obviously, because depositors are not solid, they're worried. Now, the interesting point, as the Cabessa letter points out, is that we've seen this before. Silicon Valley Bank and First Republic Bank, just days before their collapse, desperately tried to raise new investments. They both desperately tried to sell shares, nobody was interested, and the bank collapsed. Clearly, the company does not have strong liquidity or a strong deposit base, and therefore the CEO said he was confident that they would execute on their turnaround plan was clearly either a lie or an impossible task. So clearly NYCB did not have strong liquidity or a strong deposit base. And when the CEO said he was confident they would execute on their turnaround plan, that was either a lie or an impossible task. Now, you may have seen that later on this morning or later on today, NYCB did eventually announce an equity investment of more than $1 billion, led by Stephen Munchen's Liberty Strategic Capital, Hudson Bay and Reverence Capital Partners. And a name they're missing out of this list is also Citadel Securities. Yeah, that's right, Citadel Securities and a few others have just lent NYCB $1 billion. Or not even specifically lent, but invested into NYCB $1 billion, and therefore obviously aren't requiring interest payments or that amount to be repaid. Now, the first thing that jumps into my mind is how long is $1 billion really going to last? You might say, well, Tom, $1 billion is tons of money. Surely that will last years, if not decades, right? But don't forget, NYCB announced a surprise Q4 loss increased to $2.4 billion in one singular quarter. So by that rate, $1 billion buys them just over a month to survive. So in reality, $1 billion for a regional bank actually isn't much money at all. And obviously what's even worse for the shareholders of NYCB is how much dilution is going to come of that $1 billion investment. They're selling shares at $2 per share, so that's 500 million new shares effectively. So it seems Citadel is desperately trying to kick the can and desperately trying to keep these banks alive, now digging into their own personal pockets to try and avoid a stock market crash. Likely because Citadel knows if the market does crash, it not only brings down the market, but also brings down those short sellers like Citadel Securities, causing the AMC squeeze. Now, Zero Hedge has also tweeted explaining why these regional banks are in such trouble at the moment. So Zero Hedge said the delinquency rate among large banks hits 3%, the highest in 7 years. But the delinquency rate among small banks hits 7.8%, the highest on record ever. You can see back in 2008, 2009, mortgage defaults hit 7% or just below 7%, causing the 2008 financial crisis. Right now, those defaults aren't below 7%, they're at 7.8%. Right now, the default rate on loans is higher right now in 2024 than it was back in 2008. This is what's causing bank failures, this is what's causing a commercial real estate crisis, and this is what will cause the market to collapse. Now, Justario has also tweeted saying the FDIC is saying the Silicon Valley Bank and Silvergate Bank rescue is turning out to be more expensive than they expected and needs additional funding from banks. And he says, and then you wonder why New York Community Bancorp hasn't yet received a bailout, because neither banks or the FDIC have any cash to spare for another bailout. Clearly, we're going to have more banks failing, just like NYCB and many banks after them, as there's no cash left for those bailouts. As Stefan tweeted, he said the FDIC is telling banks the rescue of SVB and Signature Bank, and I guess Silvergate Bank, is turning out to be more costly than initially expected. Both Citibank and PNC said today they expect hundreds of millions more in fees from the special assessment in the first quarter. This banking crisis is turning out to be absolute chaos, and the second banking crisis or second round of bank runs is just round the corner. We are going to see more banks failing, we are going to see more crashing in the market, and we are going to see the AMC squeeze. As Robert added, he said the shorts are so scared they need capital requirement permanent exemptions, synthetic risk transfers, tokenization, bullet swaps or total return swaps, reverse repos, the bank term funding program, operational shorting and synthetic shares, and they still can't hold back the squeeze. And he said, you want me to believe that with all of this, that the apes are somehow losing, which is clearly absolutely false. The shorts need all of these ways to lie, cheat and steal their way around the squeeze, and they're still losing. And it won't be long until the squeeze comes to fruition. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.